Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, and it's October 19th here. We got a few items on the economic calendar to go over, and we'll start off, of course, the weekly jobless claims. So last week we had 244,000 people apply for unemployment. A forecast for this week came in at was 240, and the actual number came in at 222,000. So when you factor in these major tragedies we've been having around the U.S. here, from the hurricanes and Florida and Texas, which were major, and then we got the fires going on out west, especially here in California. We got very little unemployment here. Very little people applying for unemployment. You would suspect a lot of those people that were affected by these tragedies would be applying. So we really haven't had any high numbers, and it was up maybe one week was kind of high, almost 300, not quite, and then every week it just kind of dwindled down further from that. So it just tells you the resiliency of our economy right now. Also, we got Philly Fed this month. We had 23.8 in the month of September, and it jumped up in October to 27.9. So earlier we had the Empire State Index, which was the New York manufacturing. Now this is the manufacturing in the Philly area. So both areas fared quite well this week, which is obviously very good news. On the other side, we got leading economic indicators for the month of September. So back in August, it jumped up 0.4%, but it pulled back in September by 0.2%. So let's go here and take a look at the headline news. The stock market is down. The Dow started off like minus 100 this morning, and then since they've really kind of pulled back a bit, now it's down around down about 25, but it started off much further down, and then it's kind of pulled back. We got earnings reports came out there. There's been concerns about Apple. I guess there's the watch. I guess there's concerns about manufacturing out of China, and then the demand for the iPhone 8 and 10. It seems to be on a slow ramp up, so it doesn't like. So there's concerns about that. But the big thing so far today that's really kind of driving the market is here, the Catalonia and Spain showdown. If you aren't aware, Catalonia had a referendum and they voted to become independent of Spain. And now the Spain government basically gave the Catalonian, president, told him that he's got to step down or by today, and that deadline's passed, and Spain is threatening to come in and take over their government. And this is obviously, Spain is one of the bigger Euro countries over there, so this is kind of disrupting the global markets as a whole. And then also we got some lackluster reports that came out of China today. So, it was a bit disappointing. And then a little part, but I don't know how much this really played a role in it, but it is fresh on people's minds. The 30th anniversary of Black Friday. It's especially on their minds now because, there are debates as to is the stock market overvalued, especially considering how much it's shot up since the election. Is it an overvalued position? Some argue that if we get these tax cuts, it's going to go up further. Others argue it's overvalued. So we got both sides kind of debating on that. But again, the 30th anniversary of Black Friday, the worst single day drop in our history, is kind of a reminder of that. So let's go ahead and take a look here at how the bond market's being affected by this. We were having a much better day here as we started the day way up here. As you can see, we were up at, I think at one point around 14 or so basis points, and since we're down for the day, now we're only up 5 basis points, unfortunately. We are touching off this resistance level. We are still above the 200-day moving average, but again, we're off from our previous highs for the day for the mortgage-backed securities here. So pricing, the East Coast probably got better pricing, and then as we got in the day, they probably worsened. Here on the West Coast, we're kind of seeing more of this type of pricing, so there really hasn't been any change in pricing for the most part for here on the West Coast. Here's the yield. So as you can see, we were even testing the 200-day moving average, which would have been great for us because now yesterday we went above that and stayed above it. If we could have gotten below that, they could have helped push yields further down, which would help out mortgage-backed securities, in turn helping interest rates out. But as it's staying above this, resting at it's down about 3 basis points, I think, right now. We're still hovering around the 231 level versus the 230 229 level here that we were earlier today. So we'll have to kind of wait and see where things turn, but it did subside a bit from where it started the morning off. All right, so that pretty much wraps it up for the day. I hope you guys have a wonderful day. But if you guys want to get more updates, you can find me on my handle at Mike Bjork on Twitter. Just come over to Twitter and you can get updates throughout the day. Thanks so much for watching. We'll see you guys tomorrow. Bye bye.